Yesterday something happened which will change the situation for Bitcoin. And something else happened also to me, which I never thought would happen in my life. The Federal Open Market Committee release was at 2 p.m., which was in the evening here in Sweden at 8 p.m. And I was reading a bedtime story for my 2 youngest kids. I finished reading maybe at 8:10. Then the press conference hadn't started yet. It started at 2:30 p.m. US time, which is 8:30 p.m. Swedish time. But the PDF was available because that was released at 2 p.m. So I was laying there in bed next to my kids checking my phone, reading this, and I feel like, but the majority of the FOMC participants are actually saying that there should be one more hike to 550, 575 this year in 2023. And I posted this in our Discord at 8:23. I read this as majority think one more hike in 2023, or it's the same data, just a different table. Still at home on my back checking my phone. Darren, I'm just staring at the 2-year yield chart. And I wrote, if one more hike in 2023, this one should break out. And it hadn't yet then. And I wrote that at 8:26. And if you look at 2024, most of them thought it should be around here, 5 to 525, which is higher than they thought in June, the last time when they issued this one. Then they thought that it should be around here, 425 something, most of them. And same for 2025. This was in June, little above 3. Now in September, they think higher for 2025. So they revised up the rates for 2024. And for 2025. And all this was clear before the press conference had even started. Then during the press conference, of course Powell, who seems an amazing guy by the way, when I'm 70, that's how sharp I want to be, he explains this.
If you looked at the SEP, as you obviously will have done, you will see that a majority of participants believe that it is more likely than not. Compared with our June summary of economic projections, the median projection is unrevised for the end of this year, but has moved up by a 0.5 percentage point at the end of the next 2 years. That it will be appropriate for us to raise rates one more time in the 2 remaining meetings this year.
And only then the 2-year yield breaks out. And also the 10-year yield also broke out and closed at levels we haven't seen since 2007, 16 years ago. And you got to understand that these yields control the world. There's an enormous amount of economists and analysts and professional fund managers depending on these yields for billions or even trillions of dollars. And still, a humble engineer on my back, checking my phone while kids fall asleep, can come to the conclusion that this one should break out a little earlier than all those economists did. And the markets moved. Maybe it's the 6 years of full-time practice with crypto, the realization that you have to be fast when it counts. Maybe it's because most people have gotten so lazy that they can't read a document anymore, that they have to wait for Granddaddy Powell to explain it to them. Maybe it's for another reason, but I never in my life thought that I would be able to see stuff related to the most watched part of the US macroeconomy before the market. But here we are. I never thought that would happen, but yesterday it did. So clearly, we have learned something after all. Everything is learnable, guys. It is. Okay, so what does this mean? First of all, these projections doesn't mean it will happen. As Powell explained 20 times to 20 reporters yesterday, this isn't a plan. It's a projection. Depending on what actually happens until then, what data comes in, these projections might change. They have reactive ways of working, not relying on being able to predict the future. And if we look at CME, the majority of the market participants still don't think that there will be another hike. This is for November. Current target rate is 525, 550. Here it's 525, 550. December, January, March, May, June, and a reduction in July. And perhaps even clearer from this table. Of course, we don't know which of these are wrong and which are right. Okay, but what does this mean in practice? Short term, Yields going up means that you get better return on almost risk-free investments. If you have $100 now, you get $5.17 in risk-free return on that over 2 years. That's pretty good. Then some people will decide to not speculate on a pump in Apple or Tesla and just take the safe money instead. So Nasdaq tanked, S&P 500 tanked. This is the futures, so here is the Wednesday candle, and here we have a candle for today, Thursday, as I'm recording this. And as you can see, we are now coming very close to completing a head and shoulders pattern in the S&P 500, if this neckline breaks and closes now. You remember we had this inverse head and shoulders in 2022 that completed in May 2023. So while media was full of fear-mongering, the big institutions actually bought, and the trade worked out for them. This came very close to perfectly reaching the target. This was an inverse head and shoulders, which is bullish. This is a head and shoulders, which gives a bearish target, if it confirms. And if I overlay the 2-year yield, you saw here that when the yield went up, the red line, S&P 500 tanked. But this is short term. Long term it's different, so hold that thought for stocks for a moment and let's look at Bitcoin first. Short term, looking at the recent periods. Moves in the 2-year yield has definitely been correlated with a move in the opposite direction for Bitcoin. We see this easiest if I instead overlay 1 divided by the 2-year yield. Then it's easy to see how these have followed each other during large parts of the recent moves in Bitcoin, including the recent month. So this one dropping from Tuesday's close to Wednesday's close means we should expect a dump in Bitcoin, and it did dump a bit today. Also, this particular increase in the 2-year yield was significant because it broke out through this resistance where it rejected multiple times in the recent past. So will it continue now when through the resistance? That could then mean further downside for Bitcoin. What models the picture now is the other clue we have, the DXY, the dollar strength index or the dollar currency index. If we add back the yield, not the inverted yield, you see how these follow each other. Here, here, here. And this one is almost at the 106 resistance, but hasn't broken out yet. If it rejects here, which is always the default assumption until a breakout happens, a rejection and move down here usually gives upward strength for Bitcoin. So I guess we'll find out the next couple of days. If this breaks out too, then we have 2 strikes for BTC and I will be more confident to say downwards pressure. Now, these are all short-term considerations. If we take a step back, and this might come as a surprise to many, if we go back to the S&P 500 and overlay the 2-year yield again, not the inverse, and back up to the previous crisis, you see here during year 2000, it was when the yield started going down, cutting rates, that the stock market tanked. And next time too, when starting to cut rates, the stock market tanked during the financial crisis 2007 to the bottom in March 2009. So it wasn't when the Fed began cutting rates that the stock market pumped, which is what everyone on Twitter seems to believe will happen now. No, the stock market dumped while cutting rates. So this is very important. It was during the periods of rising rates, here, and even here from 2011 until 2018, maybe anticipating rate cuts, that the stock markets pumped. So kind of buy the rumor, sell the news event that we're all familiar with from crypto. Do you see how we get lessons in market dynamics from crypto in super speed that would take maybe 20, 30, 40 years to gain in the traditional markets? Isn't that amazing? And if we look at this very carefully, you see that the stock market topped after the 2-year yield began going down, and at least very close here too. So when that happens this time, that could be a huge clue. Now, of course, there's a danger in taking old data, thinking that it will repeat exactly. Maybe it won't. Maybe the economic situation then was different and it doesn't apply. But at least consider the possibility. As you know, my process isn't predictive. The Larsson Line process is a reactive process, trying to react to what actually happens. I just need to be aware of the scenarios that could play out. That's all I need. And that is definitely a scenario that could happen. That markets run up until Powell and the gang actually starts cutting rate and the 2-year yield starts dropping. And we're clearly not there yet. No one really thinks any rate cuts are due until mid next year. So for Bitcoin, maybe we break out from the range on the upside after all. Or we fake first, break down, hit this support, and maybe even this support, this level, and then move up. I think anyone who say that they know what is going to happen from here over the next 1 year are straight out dangerous. Powell doesn't know himself what will happen with the rates. He said it yesterday like 5 times. Do you know better than him? Does some anon profile picture on Twitter X know the rates better than Powell? No. And I don't subscribe to the idea that Bitcoin lives in isolation from the rest of the economy, and that only the constant in the code of the halving block matters, or that there is a stock-to-flow model that predicts Bitcoin price. I said that in 2021 and 2022, but I think a lot of people learned that the hard way, unfortunately. Bitcoin today behaves as a speculative asset, and then it matters a lot how much liquidity flows in the direction of speculative assets. But then there are a few things we can say with certainty. Global technology like Bitcoin rarely ends up halfway. It's a giant success or a giant failure, nothing in between. I think the way to manage the uncertainty right now here in the middle of the range is with position size. I have changed nothing. If we break the range on the downside with Larsson Line down, I will lighten the load further and try to rebuy at these supports. If we reach the range high with the trend down and seem to reject, again, I will lighten the load further. If we break out on the upside, hold, and maybe retest and flip resistance into support with Larsson Line Gold, I buy there. I much rather buy at higher prices with higher confidence and shorter downside risk to invalidation than just gamble buy in the middle of the range. I'm not going to sell everything no matter what, mostly for emotional reasons. That's my plan. It hasn't changed. I was already correctly positioned about 70% in cash before this breakout in the yield. This is a boring stretch. I heard the term time capitulation the other day. That I think is very good. Here we had price capitulation. Now we have time capitulation, which is even harder for most people. Most people quit here or here, and they won't be around when we start trending up again, from whatever level that may be. And I'm saying when, not if, because I don't see any signs of Bitcoin disappearing or becoming irrelevant. Even the most die-hard crypto hater in the SEC doesn't have one bad word to say about Bitcoin. And I am pro-innovation. The last 1000x altcoin hasn't been programmed yet. The last 1000x tech company hasn't been founded yet. I can almost guarantee that. It's just the nature of global technology. And tech isn't disappearing from our lives, is it? The digital world is becoming more important in our lives every year. You sitting here right now, watching me here on YouTube, is one proof of that. So my conclusion is to double down on global technology, double down on technical analysis, double down on crypto, double down on tech stocks. As the example showed last night when putting kids to sleep, we can outperform the world's best analysts in macro. Then imagine what we can do with altcoin analysis, where it's mostly a bunch of programmers, scammers, and amateur speculators who have absolutely no idea what they are doing on the other side of the trade. I am quietly doubling down on Larsson Line Pro, adding to the features, adding to the process. I'm going to announce one big feature today, for example, to members. No one is interested in altcoins at this point of the market because it's boring and it's difficult. 88% of the coins are blue. But just watch, guys, just watch. This chop won't last forever, that I can guarantee. This is Mr. Beast's subscriber growth. This is 14-15 years of relentless work every single day. Most people overestimate what they can do in 1 year and they give up. But they underestimate what they can achieve in 10 if they keep going. I'm only 6 years into my journey with crypto, and it's already changed my life more than I could ever have guessed in the most positive of ways. But some of the insights that I come to about the growth of global technology come easy to me because I have 35 or 40 years of experience with tech. People who say that they're not willing to take a course and build a network that might help them for life. I honestly don't get it. I don't. Why thinking so short-sighted? The people who will smash it in crypto are people who manage to stick around, who study relentlessly, who don't fall during the time of capitulation, who instead double down. I'm clearing my plate from other great opportunities so that I can focus my next years on what I think is my number one opportunity, which is tech invest. I aim to become the best in the world at that, with the best analysis, the best tools, the best processes, the best network of people. And as I said in the first video on this particular channel, my numeric goal is to increase my total capital by a factor 1000x without taking too big risks, because I can't with 4 kids, and I'm on track towards my goal. For Bitcoin, I think we're getting closer to a breakout from the range. That's when the real action starts. Yields breaking out with the Larsson line down means don't rule out a downside breakout, because hodl on the way down sucks. Thank you, tack. City och Larsson out. Hej då!